Stop scrolling. This mid-January, pensioners across the UK are facing shocking changes that could affect their bank accounts and benefits, and most people don't even know about it yet. If you're getting a pension or know someone who does, you cannot afford to ignore this. In the next few minutes, I'll reveal exactly what's happening, what the DWP really wants, and how you can protect your payments. And trust me, what you're about to see is not being explained anywhere else. Stay with me till the end, because missing even one detail could cost you. If you want to stay ahead of all these updates and make sure you never miss crucial DWP alerts like this one, hit that subscribe button right now. This channel is your one-stop place for every pension, benefit, and government update. I upload videos exactly like this all the time. Click subscribe and turn on notifications, because I'll be bringing you more of these updates as soon as they happen. Don't risk missing out. Today we want to talk about a topic that's been spreading online, in headlines, in social media groups, and in messages that many people have shared, especially among pensioners and older folks in the UK and their families. The message usually looks something like this. DWP, warning. New bank account rules hit pensioners this mid-January. It's dramatic and it sounds urgent, and that's exactly why so many people click on it. But before we get into panic mode or start worrying about pensions being taken away or blocked, let's take a step back and look at what's really happening in everyday language. Let's look at what the Department for Work and Pensions has actually said, what the government has actually passed in law, and what is true versus what is rumor or misinformation. First, it's important to understand the context. For decades, the Department for Work and Pensions has been responsible for paying pensions and benefits to millions of people in the UK. That includes the basic state pension that millions of older people receive, and also a wide range of means-tested benefits such as universal credit, pension credit, employment and support allowance, and others. The idea of a pension or benefit payment being stopped suddenly always feels frightening, especially if someone is living on that income week to week. So when a headline says that new bank account rules will suddenly affect pensioners in mid-January, it's natural for people to worry. But here's where we need to be precise. There are two very different topics that sometimes get mixed together in scary headlines: changes to payment schedules and new powers the DWP has been given to check information about some bank accounts for fraud and overpayment reasons. Let's start with the payment dates. At the beginning of the year, many pensioners and benefit claimants noticed that their payments might hit their bank account on slightly different days from what they expect. That's because of bank holidays, weekends, and how the weekly or monthly payment calendar lines up at the start of January. For example, some pensioners reported that they didn't see their usual payment on the exact day they expected it early in January, and that caused stress and confusion. This is usually just because banks process payments differently around holidays, and the schedule shifts slightly at the start of the year. It doesn't mean your pension has been stopped or that there's a new rule cutting off payments. It usually means the payment is just arriving on the next working day instead of the exact day you might be used to. News outlets and personal stories online have highlighted this experience, but again, this is about timing, not a new outright rule that pensioners' money will be blocked or taken away this January. Now, the second thing that some people confuse with these payment date articles is something completely different. Changes in law that give the DWP new powers to check information about bank accounts for benefit fraud and error purposes. Over the past year or so, Parliament has been considering and progressing a law called the Public Authorities Fraud, Error and Recovery Bill. This bill, once enacted, gives a range of public bodies, including the DWP, new powers to help them detect and prevent fraud, recover overpaid benefits, and check eligibility for certain benefits. It's designed to reduce errors and fraud within the public benefit system. Under this new law, the DWP will have what are called eligibility verification powers. What that means is that when someone is claiming, for example, universal credit, pension credit, or some other means-tested benefit, the DWP will be able to ask banks and financial institutions for limited information necessary to check eligibility. This is not the same as having unlimited access to all of your bank details or watching every transaction you make. What the government has said is that these powers do not allow the DWP to see everything in someone's bank account or how they spend their money. They can only request specific information that helps check whether someone is genuinely entitled to a benefit or whether they might have savings above the legal limit or other factors affecting eligibility. There are supposed to be safeguards in place, and the government has stated that these powers will not be used on the basic state pension. That alone is explicitly excluded from these bank checking rules. Another thing people have been talking about is that the DWP will have powers under the new law to recover debts directly from bank accounts. This is also true. The bill will give the DWP broader powers to recover money that was overpaid in error or fraud, but these powers are not automatic, and they are not usually used where someone is still on benefits. They are designed to be a last resort option to recover money after notice and appeal rights have been given. They are not a mid-January rule that suddenly makes pensions disappear. So what's the bottom line here? The simple and accurate bottom line is this. There are no confirmed new rules taking effect in mid-January that will suddenly block or stop pension payments for pensioners across the UK just because of bank accounts. Headlines that suggest your pension will be blocked if you don't update your bank details, or that new bank account rules hit pensioners now, tend to be exaggerated or based on unofficial interpretations rather than official government communication. What is true is that the DWP and the UK government are making changes over the course of 2026 to strengthen their ability to check for fraud and overpayments within the benefit system, using targeted information requests from banks. But the way those changes are being communicated in some media and social posts is often misleading. If you are a pensioner or you care for someone who is, what actually matters right now is fairly simple and practical. Make sure the DWP has accurate contact information and correct bank details for where payments should arrive. If you change bank accounts, or if you have a joint account, or if there are questions about where your benefit or pension goes, always update that information with the DWP well before any payment date. That is not because there is a sudden new rule this month, but because if the DWP has wrong information, it can cause delays in payment. And that's a real problem for anyone relying on that money. These kinds of administrative issues are far more common causes of delayed payments than the new fraud powers themselves. Another practical thing to watch for is official communication from the DWP, letters, phone calls, or written statements asking for information. These are usually part of routine reviews, not a dramatic new rule being applied on a single day. If a person does get something that looks unusual, the best course of action is to check directly with an official DWP phone number or with their local Job Center Plus or Pension Service office. Scammers often use fake messages pretending to be the DWP that claim your payments will be stopped unless you click a link or send information immediately. Official DWP communications will not ask for bank account numbers or sort codes by text message or email, and they will not threaten you with immediate loss of pension without giving you proper written notice and the ability to respond. For many pensioners, reading about government fraud powers can feel like an invasion of privacy. That's understandable. Nobody wants their bank account looked at without their permission. But it's worth remembering that many parts of the government already have similar powers in other areas, such as the tax authorities, and that these new powers are aimed at reducing very large losses from fraud and error in the benefit system. They are not about randomly spying on retired people who have done nothing wrong and simply receive their state pension each month. A lot of the fear comes from misunderstandings and from the way sensational headlines are shared without clear context. When viewers see something like new bank account rules hit pensioners mid-January, the natural reaction is to imagine bank accounts being frozen or pensions being cut off. But as we've explained, the reality is much more narrow, procedural, and targeted. And there is no confirmed government announcement that makes pensions automatically disappear under some new rule on a particular date. So if you are watching this video and you're thinking about your own pension or someone you care for, here's what you should do. First, take a breath and don't panic. Know that the basic state pension is not being taken away by some new bank rule, and nothing has suddenly changed in January that stops those payments. Second, make sure your information with the DWP is correct and up to date. Third, if you do receive any official letter or notice asking for verification of information, take it seriously and contact the DWP to confirm that it is genuine before responding. And fourth, if you see dramatic or urgent messages online about pensions being at risk, always check with official sources, not social media rumors. In summary, the situation that many people have been talking about online is partly based on a real change in the law regarding fraud and benefit eligibility checks, but it's not a sudden mid-January rule that freezes pensions or cuts payments for older people. That real change has been in the works as part of a broader fraud and overpayment prevention effort, and it is targeted at specific types of benefits and specific circumstances. It does not mean the government is going to start watching every transaction you make, and it certainly does not mean all pensioners will suddenly lose their income. And that is the calm, factual truth behind those dramatic headlines. Stop scrolling. This mid-January, pensioners across the UK are facing shocking changes that could affect their bank accounts and benefits, and most people don't even know about it yet. If you're getting a pension or know someone who does, you cannot afford to ignore this. In the next few minutes, I'll reveal exactly what's happening, what the DWP really wants, and how you can protect your payments. And trust me, what you're about to see is not being explained anywhere else. Stay with me till the end, because missing even one detail could cost you. If you want to stay ahead of all these updates and make sure you never miss crucial DWP alerts like this one, hit that subscribe button right now. This channel is your one-stop place for every pension, benefit, and government update. I upload videos exactly like this all the time. Click subscribe and turn on notifications because I'll be bringing you more of these updates as soon as they happen. Don't risk missing out.